Have you ever looked into a market, maybe one you don't follow closely, and wondered if there's a hidden gem, an opportunity that seems almost, well, too obvious?
Happens all the time.
Exactly.
Right.
And today, we're doing a deep dive into something just like that, a company our sources are actually calling the most undervalued play in its whole sector.
That's a pretty bold statement.
It is.
Right.
We're talking about Blende Silver Core and their main project, the Blende project, which is up in the Yukon, a place known for its minerals.
Right.
So what we want to do for you today is really cut through all that jargon, get to the heart of what makes Blende Silver potentially interesting, especially when you start looking at the actual numbers.
Okay.
We'll unpack its history, dig into the geology, which is pretty unique, check out the resources they've defined, and then, really focus on that valuation piece.
And it's fascinating, isn't it, how these metals, you've got silver, zinc, lead, they often get looked at separately.
Yeah.
But here they combine to tell a much more compelling story. They're strong on their own, sure, but together, especially in a place like the Yukon.
Wow.
Well, it's known for its mineral wealth for a reason.
Yeah.
And these aren't just, boring industrial metals anymore. Their role in new tech, renewables, batteries, it makes a project like this feel very timely.
Okay, so let's pull back the curtain. Blende Silver Core. You can find them listed TSXV, BAG, OTC, BEDGF, and also in Frankfurt, BCW1.
Got it.
They're basically focused on exploring and developing these silver, zinc, lead deposits based out of Vancouver.
And that location you mentioned, the Blende project itself, that's really key. It's up there in the Yukon, about 64 clicks north of Keno Hill.
Right, in the Mayo Mining District.
Exactly. And the Yukon itself, it's not just scenic views. It has this great reputation as a low-risk, pro-mining place to work.
That's huge, isn't it, for mining companies?
Yeah. Oh, absolutely. The Fraser Institute consistently ranks it in the top tier globally for, policy attractiveness. Having that stable environment, that's worth a lot, almost like finding extra metal in the ground.
So the project itself, the Blende property, our sources call it the largest carbonate-hosted AgZNPB deposit in Yukon. That sounds pretty significant.
It definitely is a strong claim, and it gives us important geological context. When we say carbonate-hosted massive sulfide deposit, well, picture the valuable metals concentrated in specific carbonate rocks, like dolomite.
Okay.
These aren't just random occurrences. They often form really rich deposits, sharing traits with those famous Irish-type zinc-lead deposits or the clastic-dominated ones. It's a good neighborhood, geologically speaking.
Right. So let's dig into the property specifics. They own it 100%, Blende Silver does. It covers, 260 quartz claims?
Yeah, that's over 400 hectares. It's a big piece of land centered on Mount Williams.
And the mineralization itself runs along a corridor, something like 6 kilometers long.
That's right, a substantial footprint. And the mineralization style is, well, it's quite interesting. It's structurally controlled, hosted in breccia.
Breccia. So like broken rock fragments cemented together.
Exactly. Fractured rock, then filled in and cemented by minerals. It forms the sort of tabular body, dipping steeply, and it cuts across the existing rock layers. This zone pops up intermittently for about 8 kilometers, and it can get wide up to 200 meters in places.
Wow, okay. And what's in that rock? Where are the metals?
Good question. So the zinc and lead, they're mostly in their sulfide forms, sphalerite for zinc, galena for lead, pretty standard.
And the silver?
The silver is mainly tucked into minerals called tetrahedrite and also within the galena. You also get some pyrite, a bit of chalcopyrite that's copper.
Okay. Now here's something I found really interesting in the source material. Near the surface, weathering has apparently changed some of the sulfides.
Yes, that's a key detail, a significant amount actually. The weathering has converted some of the zinc sulfide into zinc carbonate called smithsonite, and the lead sulfide into lead carbonate, anglesite. So you have both sulfide and oxide, or carbonate mineralization near surface.
Why is that significant? Does it affect processing or?
It can, but the bigger picture here is this polymetallic nature. Having silver, zinc, and lead means you're not riding on just one commodity price.
Diversification built right in.
Exactly. It provides a buffer. And look at the individual metals. Zinc's price is up, around 2% year over year. Its use in renewables, batteries, even fertilizers is growing.
Right.
And silver, well, its conductivity is essential for solar panels, photovoltaics. Demand there is surging too. These are strategic metals now.
Got it. And the property's broken into zones, far west, west, central?
Yeah, 5 main zones, far west, west, central, east, and far east. And the sources mention the highest silver grades tend to pop up in the west zone.
And they found native silver in the east, like actual flakes of silver.
Apparently so. That's the kind of thing that definitely gets geologists excited, finding visible, raw metal.
Okay, so let's step back a bit. What's the history here? Who worked on it before Blend Silver?
Well, the initial serious exploration was back in the early 90s. A company called Billiton Resources Canada, Inc. did quite a bit of work.
Billiton, okay. Big name.
Yeah. They drilled 77 holes over 14,000 meters and outlined 2 main zones. Hit some really nice high-grade intercepts, too.
And then someone else came in later.
NDU Resources. They confirmed mineralization continued west and even found some significant copper.
So Billiton's early work, did that result in any kind of resource estimate back then?
It did. They put out what's called a historical mineral resource in 1991. It wasn't NI 43-101 compliant, of course. That standard didn't exist then.
Right. But what did it show?
It estimated about 19.6 million tons in total. The west zone was the bigger piece, 15.3 million tons, grading around 3% zinc, 3.2% lead, and a healthy 67.5 grams per ton silver.
And the east zone?
Smaller, 4.3 million tons, similar zinc grade, a bit lower lead at 1.3%, and 15 grams per ton silver.
Okay, and this seems really important. Our sources have that big disclaimer.
Yes, the standard, crucial, cautionary note.
It says, basically, a qualified person hasn't done the work to classify that historical estimate as current. The company isn't treating it as current, and you shouldn't rely on it.
Absolutely.
So, for you listening maybe new to mining stocks, why is that distinction so critical, historical versus current?
It's fundamental. A historical estimate gives you a sense of scale, maybe potential grade, from past work. But it lacks the rigor, the specific methodologies, the verification by independent qualified persons, or QPs, that are mandated under modern standards like NI 43-101 in Canada.
So NI 43-101 is like the gold standard for reporting.
Exactly. It ensures transparency, consistency, and a certain level of confidence in the numbers based on defined parameters like cutoff grades, assumptions about mining and metallurgy, and current metal prices. The historical numbers just don't have that same level of scrutiny applied.
So potential, but not bankable in the same way.
Precisely. Now, Blend Silver did do more drilling later with Eagle Plains Resources between 2006 and 2008. They added another 45 holes, almost 9,000 meters. So the total historical drilling database is actually quite large, 132 holes over 25,000 meters. That's a lot of information.
And some of those historical drill results, even with the caveat, they really make you look twice. I mean, one hole, B88003 in the west zone.
Yeah.
It had 1.52 meters grading, get this, 25.8% lead, 9.67% zinc, and 1,724 grams per ton silver.
Wow, that silver grade is incredible, over 50 ounces per ton.
Right. In another hole, 9481 had nearly 15 meters, saying over 235 grams silver, 10% lead, 5.6% zinc, plus some copper. So even historically, there were signs of very high grades.
Definitely hints at the potential richness of the system.
Okay, so let's fast forward. We need the modern reliable numbers. That brings us to the 2018 NI 43-101 report, right?
Correct. The maiden blend NI 43-101 mineral resource estimate. Announced April 2018, effective date March 2018, done by Moose Mountain Technical Services. This is the current compliant estimate.
All right, give us the headlines. What does it say?
Okay, it breaks down into 2 categories. Indicated and inferred. For the indicated mineral resource, we're looking at 3.65 million tons. Grading at 5.18% zinc equivalent, or ZNEC. Remember, ZNEC combines the value of all the metals into one number for comparison.
Got it. And in terms of actual metal?
That indicated resource contains about 159 million pounds of zinc, 157 million pounds of lead, and just under 4.2 million ounces of silver.
Okay, that's the indicated. What about inferred?
The inferred mineral resource is much larger. It stands at nearly 33 million tons, 32.98 MT to be exact.
Whoa.
Grading slightly lower, but still strong at 5.03% ZNEC.
On the metal contained in that inferred portion?
It's substantial, 1.46 billion pounds of zinc, 1.36 billion pounds of lead, and almost 34 million ounces of silver.
Billion with a B.
Billion with a B for the zinc and lead pounds in the inferred category.
Yeah.
And these numbers use a 2.0% ZNEC cutoff grade.
That's a huge amount of metal defined. And what's striking is how much bigger this 2018 estimate is compared to that old 1991 historical one.
Right. And our sources say that's down to a few things. Obviously, the additional drilling helped, but also using higher metal prices in the 2018 calculation, and crucially, a better handle on the metallurgy.
Metallurgy meaning how you actually get the metals out.
Exactly, including understanding how to recover both the sulfide minerals and those near-surface oxide carbonate minerals we talked about. That improves the overall recovery potential.
And the thinking is this could be mined via open pit.
That's the vision, a potential bulk tonnage open pit approach. And that's a big deal because, generally speaking, open pits have significant cost advantages over going underground.
Cheaper to operate.
Usually, yes. And the mineralization here actually starts right at the surface, confined to two main areas that could become pits, the west and east pits. They're about 2 kilometers apart currently.
And the recoveries look decent.
Estimated recoveries are pretty good. 70% for zinc, 85% for lead, and 90% for silver. Those are positive numbers for this stage.
Okay, now let's pivot, because this is where the story gets, well, kind of crazy, according to one of our sources, the valuation. There's this report, the SST Silver Stocks 2025 update, dated August 6, 2025. And it makes a seriously bold claim about Blend Silver.
It really does. Let's break down those numbers. Market cap around USD 2.1 million.
Tiny.
Very small, yeah. About CAD 2.8 million. Roughly 71 million shares out. Now, the enterprise value, or EV, which is market cap plus debt minus cash, a better measure of total value, is even lower, around USD 1.85 million.
Okay, so EV is under 2 million US.
Right. Now, here's the calculation the report makes. Using current metal prices, they used $1.20 zinc, $1 lead, $28 silver.
Okay, reasonable spot prices.
Yeah. They recalculated the total silver equivalent resource, combining the indicated and inferred ounces using those prices. They arrive at a massive 371 million ounces of AQ.
371 million ounces silver equivalent. That's huge for a company with an EV under $2 million.
Exactly. And that's where the undervaluation claim slams home. Divide that EV of USD 1.85 million by the 371 million AQ ounces.
You get
You get an EV per AQ ounce of just USD 0.10, 10 cents an ounce.
10 cents.
Yeah.
How does that compare to
Well,
anyone else?
that's the kicker. Sector norms for similar exploration or development companies, they often trade anywhere from, say, USD 0.57 cents an ounce up to over USD 3.00 an ounce.
So Blend is trading at 16th to 130th of its peers based on metal in the ground.
That's the math, according to this report. A staggering 6x to 30x discount, which is why they flat out call Blend the most undervalued silver explorer in the world.
Wow.
And the cheapest way to gain silver exposure at this kind of scale, it's like the market just hasn't priced in the size of the resource at all.
So let's translate that for you, the listener. What the report is suggesting is for every $1,000 you might invest, you're theoretically getting exposure to something like 1,767 ounces of silver equivalent in the ground.
Which is, yeah, 3 to 9 times more metal exposure per dollar than the sector average, based on this analysis.
But it's not all just silver value, right? The revenue split.
The report estimates about 40% of the value comes from silver itself. But the zinc and lead are crucial. They act as credits. Their value helps offset the operating costs.
Bringing the cost of producing the silver down.
Exactly, leading to an estimated all-in sustaining cost, or AISC, of around USD $26 per ounce of AQ, which, at current silver prices, suggests potential for healthy margins if it gets developed.
Okay, that valuation argument is compelling, to say the least. What about the people running the show? Management.
Led by Brian Fowler, who's got like 35 plus years in the business. CEO is Andrew H. Rees. The sources highlight good insider alignment, meaning management owns stock, so their interests are aligned with shareholders.
And they know the Yukon.
Yeah, specific Yukon expertise is mentioned, which is definitely a plus in that jurisdiction.
Okay, and financially. You mentioned the low EV cash position, debt.
As of late February 2025, cash was about USD 0.535 million. The burn rate is quite low, around USD 222,000 a year. And importantly, no long-term debt.
But there was that going concern disclosure you find in the financials.
Yes, which is standard boilerplate for almost any exploration company that isn't generating revenue yet.
Right. It just means they'll need to raise more money eventually to keep exploring.
Precisely. It flags the inherent business model of junior exploration, relying on capital markets, rather than pointing to any sort of imminent crisis. And their low burn rate suggests they manage their cash efficiently.
So what are they planning to do with future funding? What's next on the exploration front?
They're planning a pretty significant drill program. The goals are twofold. 1, test extensions of the known zones, potentially expanding the open pit outlines.
Right.
And 2, step-out drilling, testing areas like Far West, Central, Far East, and another called the Shanghai Zone, trying to find new mineralization or connect existing zones.
And connecting those zones, particularly the east and west pits, seems like a major goal.
Absolutely. That's kind of the brass ring strategically. If they can show continuity between the east and west zones, well, you could potentially model it as one single, much larger open pit.
Which would likely improve the economics significantly.
Dramatically. Economies of scale kick in. It could effectively double the minable resource in one go. They're also planning more metallurgical work, sampling, all feeding into eventually doing a preliminary economic assessment, a PEA.
That first real look at project economics.
Right. And the 2021 technical report actually recommended a big program, 5,000 to 10,000 meters of drilling plus geophysics and metallurgy. Estimated cost around CAD 2.5 million or USD 1.85 million. So that gives a sense of the next logical funding target.
And beyond the rocks themselves, are there infrastructure advantages?
There are. Its location means it's relatively close to existing roads. There's potential for hydropower in the area, which is huge for keeping operating costs down. And Hecla Mining has their Keno Hill mill not too far away. Proximity to infrastructure like that could potentially shave 20–30% off the initial capital cost needed to build a mine. That's a significant saving.
Plus they have that other property,
Yeah.
AB in the Northwest Territories.
Yeah, a zinc-lead project up there, Mississippi Valley-type deposit. Adds a little diversification.
Okay, this all paints a pretty rosy picture, especially with that valuation disconnect. But there are always risks. What are the potential challenges here? What's the catch, if there is one?
That's the crucial question. You always need to look at the risks. The main ones highlighted are, well, typical for the Yukon seasonal weather. The winter can be harsh, potentially delaying drilling programs by 3–6 months.
Okay, logistical challenge.
Yep. Commodity prices, obviously, they can swing wildly. Although, as we said, having three metals, silver, zinc, lead, helps smooth that out compared to a single metal project.
Right, the polymetallic benefit.
And then there's funding. Like any junior explorer, they'll need to raise capital periodically. That always carries the risk of dilution for existing shareholders if they issue more stock or warrants.
Standard exploration risk profile, basically.
Pretty much. These aren't unusual risks for a company at this stage. The biggest catch, maybe, is just that lack of market attention that seems to be driving the low valuation.
Okay, so let's talk about that. Market sentiment, M&A potential.
Yeah, the report acknowledges Blende has low visibility right now. It's flying under the radar. But it also notes that the market is starting to favor juniors with large established resources.
And Blende certainly fits that bill with 371 million ounces AGQ.
Absolutely. And then you look around the neighborhood, majors like Hecla operating nearby at Keno Hill. Blende could be seen as a very logical, synergistic bolt-on acquisition for them, consolidating assets in the district.
Makes sense. So the market might be slow, but the fundamental pieces seem to be there according to these sources.
That's the argument being made, yes. The value is potentially there, just waiting to be recognized.
Okay, so let's try and bring this all together. From this deep dive into Blende Silver Core, what have we really learned?
Well, we've looked at a company focused on a genuinely significant silver zinc lead deposit. It's in a great jurisdiction, the Yukon. It has a history of high-grade intercepts, and most importantly, it has a substantial modern NI 43101 compliant resource already defined, both indicated and a very large inferred component.
But the absolute standout point, the thing that makes this story so different, is that valuation piece.
Without a doubt. That number of 371 million ounces of silver equivalent, estimated by the source report, and then comparing that to the company's enterprise value, that EV per age E counts of just USD 10 cents, compared to sector averages starting at 57 cents and going much higher, it just presents as this extraordinary outlier. It seems like a huge disconnect between the metal defined in the ground and the value the market is currently assigning to it.
Almost like the market hasn't done the math yet or doesn't believe the numbers.
Could be a combination of factors. Lack of awareness, maybe skepticism about the historical data bleeding over despite the modern estimate, perhaps waiting for that PEA. But the gap is undeniably massive based on this analysis.
Okay, so considering that huge resource scale, the open pit potential, that remarkable discount our sources point out, here's a final thought for you listening. What single development, beyond just, say, metal prices going way up, do you think would be the most impactful catalyst? The thing that could make the market finally wake up and recognize this potential?
Good question.
Would be successfully drilling out that connection between the east and west zones, proving up that single giant pit potential. Or would it be releasing a positive PEA, putting some solid economic numbers around the project? Or maybe something else entirely, like a strategic investment or move by a major player? Lots to think about there. We hope this deep dive gave you plenty of insights to explore further.